let me announce the second speaker for today. We only have two, Alessio Rutigliano. And I've known Alessio for a couple of years now or more. Alessio has come to Wyckoff Analytics and took the courses, took the whole path. And we have quite a few people that are becoming content contributors, teaching assistants, teachers. We really encourage kind of like a very collegial way of studying the material, because a lot of our courses are based on the graduate curriculum that Professor Pruden, Bruce Fraser, myself developed at Golden Gate University. So a lot of the students are kind of like growing and becoming the teachers themselves, and we definitely encourage that, because as Todd was saying, we want to spread the word of Wyckoff as much as possible. And as all of us do this, we're helping each other and we're helping others. Alessio is a great example of that path. So Alessio's speciality is in crypto. And I thought that, as he started to develop the material and started talking about this at different venues, at different presentations, he has developed a really good sense of how to analyze crypto currency world using the Wyckoff method. I also would like to mention that Alessio has a very fully packed with knowledge weekly crypto report, which is free. And you could sign up for that, or just sign up for our newsletter and you could receive it each week. That's number one. And then in a week time, Alessio will have a special, a 3-class special on Wyckoff and cryptocurrencies. So if you'd like to register, please do. Go to our website and let me just show you really quick. Go to live education under the current upcoming specials. Trading the crypto market with the Wyckoff method starts on June 2nd, 3 sessions, $199. And Alessio is going to discuss different ways of how to look at the cryptos using the Wyckoff methodology. So I definitely and highly would recommend, especially for the beginners, intermediate traders, although I know that there will be quite a few advanced concepts as well. All right, well, with that, Alessio, welcome.
Hello, everyone. I'm very glad to be here today.
All right, Alessio, let me switch the screen to you and go for it. I can see your screen.
Yeah. Perfect. So, first of all, I want to thank Todd for his great presentation. Crypto is a new dynamic industry, but it's also a place where beginners have easy access to high leverage instruments. And highly volatile environments always require a great amount of discipline. And traders like Todd are doing a great service to the community. And I think that we are very lucky to be part of this big Wyckoffian community. Each Wyckoffian has his own original touch. And the history of Wyckoff Analytics started with Professor Pruden, an exceptional educator that has taught the Wyckoff methodology for decades at the Golden Gate University in San Francisco. And discussing this methodology in live classes, studying the current market, and practicing in real time is still one of the distinctive features of our community. And this is what we do every week for free in our crypto report. You can ask questions about the Wyckoff method and submit your crypto chart. And the big news is that all the techniques that we use every day in the stock market with Wyckoff Analytics can be applied to cryptocurrency. And we are finally ready to launch a new special totally devoted to crypto trading. I've been preparing this material for a long time, 6 hours of new material, 3 sessions, starting on the 2nd of July. We will start from the basics of the Wyckoff method, And then we will explore very advanced techniques specifically conceived for crypto traders. As usual, tape reading, comparative analysis, and point and figure charting will be our main tools to spot the footprints of the composite man, big institutions or whales in the slang of crypto traders, and trade in line with them. So please go to wyckoffanalytics.com, sign up. If you can't attend the sessions, you can still listen to the recordings and send your questions. I will be more than happy to address all of your questions throughout the course. And in my experience, what I've seen is that traders that explore this asset class for the first time tend to be very, very sensitive to the new cycle. There are so many new crypto projects out there, and every day we see announcements of important partnership between giants of the fintech industry and crypto companies. All these news are weapons of mass destruction, especially for day traders. And I will never get tired of saying that studying the history of the market is the best vaccine for the new cycle disease. The more you study the big picture, especially weekly time frames, the less you will be distracted by the news. So let's start from the beginning today. The S&P chart on the bottom gives you a hint of the sentiment of the market when Bitcoin was created. We were in the middle of a global financial crisis. On newspapers, CNBC, and TV shows, there was a big debate about the role of banks in our economy. In the meantime, big institutional players were silently buying stocks, accumulating stocks, in the general panic, building the cause for a sustained multi-year bull market. And Wyckoffians were not sitting on their hands. In those years, Professor Hank Pruden published on Stock and Commodities magazine a beautiful Pnf chart of a giant accumulation structure of the Dow Jones Industrial. In a nutshell, his message was, this is a huge accumulation base. It looks bearish, but the downslope of the structure simply reflects the extremely bearish sentiment of the market. The composite man, big institutions, are buying. The point and figure chart suggests that we have fuel in the tank to go first to 70,000 and then possibly to 30,000. A multi-year bull market started in the major indexes. So in 2010, Bitcoin, that was developed and tested during the years of the financial crisis, started to be traded like a real commodity. Look at the reaction on the right side of the chart. They are in sync with the market. Even in this initial period, Bitcoin already moves in line with the financial market. This chart covers the whole history of Bitcoin. As you can see, we have three major consolidations. Let's focus on the blue box in the middle of the chart. This major accumulation produced the glorious bull run of 2017. Let's quickly review the anatomy of the previous Bitcoin price cycle. This chart condenses 6 years of Bitcoin price action. Point and figure charts are not a function of time, but volatility. Especially in this highly volatile environment, Pnf charts help us to better understand the structure of the market. Very speculative markets always show long period of institutional activity followed by quick moves. And I think that time is the major enemy of crypto traders. So Pnf charts train your eye to focus on major structures. Also, notice how the trend lines on this chart are way more significant than conventional trend lines that we plot on vertical chart on arithmetic scale. In this case, the overthrown condition followed by a big reaction is a powerful warning that the price cycle is reversed. Wyckoffians also use point and figure charts to measure the cost built in the accumulation range and to estimate price projections. The more volatility we have in a range, the more columns we produce, the higher the target. So let's focus on the big accumulation area, highlighted green. Here's the basic workflow. We go to the vertical chart, we identify the last point of support of the range, and we count the number of the columns from the last point of support to the preliminary support, from here to here. Then we multiply the number of columns of the accumulation base for the box size and the box reversal. In this case, one box to reversal, 10% scaling. Look at the flag on the top of the chart. That's our aggressive target. Oh boy, 19,000, and that coincides with the 2017 peak. That's totally uncanny, and Bitcoin was in the headline in December 2017 for the introduction of the CME futures. Strong hands took this opportunity to take profit and sell to the public in the general excitement. It's important to remark that this is not a conventional Pnf chart. Each box in this chart represents an increment of 10%, a huge number. But the volatility throughout the accumulation range, highlighted in green, is so high that 10% is the right number. And we are immensely grateful to Professor Bruce Fraser to have brought the percentage scaling technique to our attention. I was reading Wyckoff's original writings in these days, and there is a beautiful sentence that I quickly wrote down on a piece of paper. The laws of speculation remains unchangeable over time, but the language of the market is not a dead language, like ancient Greek. It lives through the actions of people and evolves with them. So do not be afraid to push the limits of the methodology. Crypto assets are a cocktail of volatility, low liquidity, momentum that you can force conventional techniques and still get accurate results. And when you trade crypto assets, you always want to keep in mind the big picture, the price cycle. For example, these two charts look identical. The chart on the left is a low cap stock that after 10 years of consolidation suddenly comes to life in 2017. Now look at the chart on the left, on the right, sorry, Ripple. Ripple was a laggard throughout the past previous cycle, and as many laggards in the stock market, it exploded at the end of the bull market. There's one song of the laggard. Stock market, crypto market, same patterns over and over. Historical analogs are important, but we're not archaeologists. We trade the current market. So let's analyze the current consolidation. Bitcoin is currently residing in this multi-year consolidation. At the left side of the chart, we see a climatic run. Wide range spreads on extreme volume. Bitcoin euphoria in late December 2017. So what happens next? This is what we call a hypodermic top. Widespread downbursts on high supply signature suggest that the composite man has urgency to sell after the massive bull run. The big sell-off, let me pick one, please. So the big sell-off on Bitcoin is a first signal that big institutions in the world were switching to risk-off mode. And Bitcoin is a very good proxy of the speculative sentiment of the market. And very often it works as a lead indicator. And that's very, very fascinating. In just a few weeks, the sentiment of the market quickly shifts from euphoria to panic. Major newspapers were reporting creepy stories about the crypto ecosystem, and the Bitcoin bubble is over. But let's analyze in a very deep way. Panic selling, general capitulation. Look at the down bar at point 2. It's a selling climax. We see the highest supply signature of the chart, but the spread of the down bar is decreasing and closes in the upper part. High effort to the downside, but low result. 6,000 represents an important value zone for institutions interested in Bitcoin. A wave of short covering comes at point 3, and price quickly dabs in just 2 weeks. Automatic rally. Then price retests the low at point 4, secondary test, and the stopping action at this point is finished. A trading range starts. This is just the beginning of a multi-year potential reaccumulation. And it's typical of hypodermic tops to be followed by long, long ranges. Value buyers were extremely active on the stopping action. However, at point 5 and 6, volume decreases, and each rally shows less and less demand. Momentum traders are no more attracted by this instrument. The sentiment of the market was still bearish. Skepticism was dominant. Trend followers were looking for other financial instruments. In this bearish context, price collapses to 3,000, extreme oversold condition. Now look at the high volume at point 7. Value buyers are stepping in again. At this point, it's too early to open a position. But after this bar, supply shows evident signs of absorption. Decreasing volume, higher lows and higher highs. At point 8, a sign of strength bar shows synchronicity between up effort and up result. This is a powerful buy signal. And the next 2 bars shows inability to react. Feather pattern. Very, very bullish price action, suggesting acceleration to the upside. A big rally starts, but at point 9, price temporarily commits above the level of the automatic rally, and the major players take profits. Look what happens next. Price reacts and consolidates again around the 6,000 value zone. Decrease in volatility and volume indicate that supply is exhausted. A rounding bottom structure suggests absorption. At this point, we expect a rally at least to the most significant supply area. And we have followed this price action week by week in our weekly crypto report. In January, we had a good up move from 6,000 to 10,000. Bitcoin was performing quite well at the beginning of the COVID crisis, but the margin calls related to the liquidity crash had a significant impact on the crypto ecosystem as well. At point 11, Bitcoin, like gold, became a source of funding. The margin calls related to the COVID reaction had a significant impact on the crypto ecosystem as well. And we have seen massive liquidation in just a few hours. Shakeout at point 12. But the COVID reaction has created a higher low compared to point 7, a first bullish clue. The next rally confirms that institutions were actively buying off the bottom. Now we are testing the long-term resistance level at point 13. And we are in the context of the intermediate uptrend. Volatility and volume are decreasing, and there is still some fuel in the tank for a higher high at 12,000. But you always keep an eye on the S&P, because if you fail, the next significant level for Bitcoin would be the top of the big capitulation bar at point 12, around 7,000. And let me show a very important price structural analog that could help us to decipher the terminal part of this long-term consolidation. This Bitcoin structure reminds me a lot of another multi-year accumulation. Microsoft at the beginning of the new century. Same pattern, big climatic run, hypodermic distribution, value buying, low momentum, absorption, shakeout, recovery. Now let's focus on the right side of the chart, here. In this case, the shakeout was related to the 2008 crisis. Microsoft quickly recovers, commits above the top of the big capitulation bar, and back up on the same level. I have highlighted this level on both charts. This chart suggests us an interesting price analog for Bitcoin. However, it's very important to remember that Bitcoin closely follows the S&P, and market conditions always affect the price structure. So you always want to analyze week by week the chart and time the emergence of a possible uptrend. At Wyckoff Analytics, every week I'm writing a free report, and my first chart is always the weekly perspective of Bitcoin and the S&P. Once price will be able to clear this long-term resistance, and the backup action will confirm the breakout, we'll be ready to identify on the point of figure charts the targets of this multi-year potential reaccumulation. And we will cover more case study, much more case studies in our incoming crypto course in July. We will study 10 years of crypto market week by week, day by day. So Bitcoin is not the most speculative instrument in the crypto family. Altcoins offer much better opportunities. The chart on the bottom here is Chainlink, one of the leaders of the crypto market. Let's apply the same techniques that we use in the stock market. First, we compare the asset to the market proxy, in this case Bitcoin. Point 1. Throughout 2018, Chainlink is stronger than Bitcoin. This long-term comparative strength suggests that Chainlink will continue to outperform Bitcoin. As the market turns bullish and Chainlink clears the resistance, it explodes to the upside. Boom. 400% move in just 3 weeks. Climatic action, point 2, a new trading range start. Point 3, COVID reaction, but high or low. Relative strength again compared to Bitcoin. Bullish glue. At point 4, price quickly recovers and tests the resistance on low supply and higher lows and higher high. This area is very, very interesting. And we have analyzed this chart week by week in our free crypto report. I would like to reconstruct the logic here. Let's proceed in a very systematic way, point by point. So, after the big shakeout, volatility and volume at point 0, as point 1, decreases. Demand at point 2 comes in, and price quickly run into the oversold condition of the uptrend. Good trade. What happens next? Let's be totally transparent, guys. When I saw that massive volume at point 3 at the same level of the top of the big capitulation bar, I was initially more inclined to consider a deeper retest of the lows. But this is the beauty of the Wyckoff method. Every time you are in doubt, a specific workflow helps you to avoid snap decisions. What do we see here? Direction at point 3 is very small. The supply signature decreases and price make higher lows, higher highs. Is this a bearish behavior? No. What happens at point 4? Price temporarily penetrates the upsloping support and then quickly comes back into the range. Spring action, high effort to the downside, higher low, low result, very constructive action. We have shown how to trade this on the intraday in the crypto report. Point 5 can fool you again because it looks like a potential sign of strength. However, Wyckoffians after sign of strength always wait for a backing up action followed by a breakout. Action, test, confirmation. No breakout, no confirmation, no entry to the long side. And finally, we see the most recent price action. The chart on the left was published in the report a couple of weeks ago. As you can see, in this case, we have been able not only to identify the right direction of the price, but we have also prepared a very good plan for our entries. Here, here, here. In this case, it worked very well, but the point is that strict rules help us to avoid bad trades, and then good analysis reward you with profitable trades. Let me say this. Maybe it's not a very romantic idea, but when we trade, especially on the intraday, we can't really predict price. Our real goal is to identify the high probability scenario and prepare our trading plans. Like in this case, I strongly believe that simulations and case studies are the best way to improve our performance. A piano player spends hours in front of his instrument, reading the partiture, practicing before playing on the stage. And we will analyze several case studies in the 3 sessions in July. Here's another interesting chart. This chart is all about the rotation of capitals. Capitals always rotate from Wall Street to Main Street, from one asset class to another, from one cryptocurrency to another. And look at these beautiful crypto indexes. I've published these 4 charts 2 weeks ago. Instead of the Nasdaq, S&P, Dow, and Russell, we have crypto indexes. Bitcoin, the major asset, then large caps, mid caps, and micro caps. It's very important to look at the small caps because they tend to lead the market. So let's follow the story of the money together. Point 1, Bitcoin. Institutions take profit. Money rotates into mid caps and micro caps. Point 2, small caps and mid caps start to outperform. Increasing volume on micro caps is a sign of institutional interest. Point 3, mid caps show selling near the overbought line. On the micro caps, supply is quickly absorbed on the way up. Outperformance. At point 4, we see a climatic move on the small cap index. Bitcoin and large cap indexes that are lagging falls to the oversold line, but volume is relatively low. And we are currently consolidating. So we want to see a consolidation in the leading index, And this chart is not updated today, but Bitcoin must keep its gain to confirm a potential continuation to the upside. Now let's talk about a really hot topic. The most frequently asked question in our forum regards the process of a selection. I want a 10 bagger in my portfolio, but swing trading at coin is very difficult. What's your strategy? I think it's a great question because the crypto market is full of this kind of opportunities, but you have to work hard on the comparative analysis. There is no free lunch. In order to catch these opportunities, you have to be very, very systematic. Here's an example. Three charts, Bitcoin at the top, large cap altcoin, and mid caps on the bottom. As you can see, the three instruments shows a very strong correlation. But on the comparative basis, the mid cap index is already clearing the resistance. So we look for a candidate to long side within this index. Here's the list of crypto assets that composes the mid-cap index. Tezos, Cardano, and Chainlink are very popular cryptos. So let's pick Cardano, ADA on the ticker, for our case study. On the daily chart, both assets shows decreased volatility, but Cardano shows a flat consolidation and high compared to Bitcoin. This is a very interesting structure. So let's let's analyze Cardano on the 4-hour chart. The change of character is very small. A first bullish clue. In the middle of a consolidation, what we see? We see high effort to the downside, but low result. Price comes quickly back into the range. Several tests tell us that supply is exhausted, and an uptrend starts. Price commits above the resistance and consolidates in the top half of the range. This is what we call a last point of support. The bars highlighted in yellow offer very, very good points of entry. Cryptocurrency are high momentum instruments. So I love how the regression channel are helping us to stalk these momentum moves. And we will see this technique in the course too. So here is the result of this very good selection. So this is not a 10 bagger, this is just a double. But I think that it's a good example that shows how a good selection is always the key to improve your performance. And this is a screenshot with 4 trading plans for several kinds of traders, ranging from stock investors to intraday crypto traders. We will study all these plans in depth in July because we want to be very, very systematic. And that's it for today. I hope to see you in the next week. Still a few days to register. You can sign up on wyckoffanalytics.com, and that's it.
All right. Well, Alessio, thank you so much. That was very interesting and insightful. And right now, guys, we are open for any questions or comments. And some of the comments that are coming in is that such a great analysis, good analysis, top analysis, wonderful analysis. So any type of questions, guys, at this point. And Alessio, let me ask you this. So you mentioned a couple of times, several times, that the special, is coming up. And I was, as you were telling me what you would like to develop in that special, what you would like to, to teach, 3 or 2 things really caught my eye. The first one was this, knowledge, ability, tools that you use that you borrow from the conventional analysis, Wyckoff analysis or technical analysis, where you look at the market, the crypto market, from different perspectives, big caps, mid caps, small caps, and then you look at their performance against each other. And this is a very much stock driven concept on the selection, so I really like that. And then also the Pnf, the way how you use the Pnf, there are certain ways of how to use the Pnf on cryptos and how not to use the Pnf on cryptos, so that also caught my eye. So could you elaborate just a little bit, not obviously uncovering all of the secrets, here and leaving some, for the special, but how are you going to discuss those two concepts?
Yes, about the rotation, well, I think that crypto is all about rotation. So basically the stock market, crypto market work in the same way. So the comparative analysis is very, very important. And basically it's what you do in the weekly discussion with Bruce every week. So basically I'm transposing that concept to the crypto market, and it really works. So I'm happy to see that. As for the Pnf charting, I think that logarithmic scales in general, and also Pnf chart using the close and not the high and the low of the bar are very, very effective. So logarithmic scales for Pnf chart or long-term tip like weekly, daily time frame are very good. While for the intraday, I prefer Pnf charting using the close. And we will see how using the high and low of the bar in the Pnf calculation for the crypto volatile environment always leads to some kind of overcounting, and we want to avoid that.
Yes, interesting. All right. So some questions are coming in. Is the recording going to be on the YouTube channel? Yes, guys, absolutely. All of our sessions are being recorded. This is a free session, so we will have it there. Excellent analysis, Alessio. Bradley is saying, do you have a Pnf count for this 2-year reaccumulation? Also, if the long-term trading range breaks to the downside, this recent rally could be an upthrust into the distribution. Is this correct?
Yes, it can happen, but I'm more on the bull camp. I have to be honest. However, I will reveal a complete Pnf count only when we break the high of the automatic rally.
This is a very important point, Alessio. And I think I know the answer to this, but let me ask you this as a question. Why would you reveal the count only after the breakout or the breakdown?
Because this is the way Wyckoffs avoid to give other people bad counts. Because you always have to watch for a sign of strength followed by a backing up action. Otherwise, the count is just a fantasy. And we want to trade facts, not fantasies.
All right. Here's a question from Kenneth. As opposed to analyzing the trading range in hindsight, what are your key decision points as the range is developing right now? So maybe we could look at the chart. Could you give us your view of the current structure? We asked Todd that question, so it would be fair to ask you as well.
Absolutely, yeah. Let me exit here. So
and by the way, this type of the analysis you actually publish on the weekly basis. So for those of you who are interested in the weekly market report from Alessio, go to our website, wyckoffanalytics.com. Sign up for the free weekly update, through the newsletter, and you'll be up to date on Alessio's thoughts, not just on Bitcoin, but on other currencies. And Alessio, maybe if you could go through like the main 3 or 4 currencies, that would be great.
Yes, so basically we are in this consolidation here, this trading range. So we identify the trading range on change of character. Also, this bar is very important because we see a lot of supply here. What do we see in this current consolidation? The first thing is that supply is decreasing. Then we see here lower lows. But at the same time, you have to be really pay a lot of attention to this kind of support, because this could be an apex formation in this uptrend. So something like this. So the point is that you want to be really careful at this point, because you could have something like this, January test. So where is the trade here? You always want to see an up bar with good demand here, and the stock market also should trade in the same direction. So the stock market is another kind of consolidation. So you want to keep an eye on both assets, because the S&P is in a very reminiscent position of Bitcoin. So that's my answer.
Yeah, I think kind of like a follow-up question here from Jason. So with the short term seems to be going to your level on 8,000. Is this correct?
It can happen. Yeah, it can happen, but here we see some kind of institutional interest for Bitcoin, but I don't like this price action. So basically, 8,000 would be a really bad action. If we stay here, we have some kind of test with decreasing volume, and then a good up bar. That could be the signal for the continuation of the uptrend, or at least another leg up or retest of this high. So that's my analysis.
Yeah, I'm observing from the top in June, from the upthrust, there are lower highs, and that kind of puts us into some kind of vulnerable position there. This latest attempt to rally also on that last big up bar, was negated really quickly, and kind of reminds me a little bit of the stock market action as we've been experiencing it in the last week or two. So very interesting correlation. Todd was also talking about this correlation. By the way, what do you think, Alessio, about that correlation between the crypto and the market? I think you're going to be discussing this in the special as well.
It's extremely important, very important. And when I trade Bitcoin or altcoins or the crypto indexes, I always want to have another screen with the chart of the S&P, always.
So how do you use? Do you look at the market first, and then, or do you look at the cryptos first? What goes first? What leads the way?
Well, generally, I want to see the stock market first, but crypto very often, since it's a very speculative instrument, lead the market. So you have to have both instruments on your computer. There's no way to.
All right. Okay.
And this is a consolidation, if you think about, on very small time frame. So basically, we have this distribution here, And then,
by the way, I think Kenneth here is asking a question regarding this short-term trading range. I can identify the automatic rally and the secondary test. Would you next expect the sprint to occur?
well, the current action could be a potential spring, but we are in the context of the downtrend on the 1 hour time frame. So at this point, we don't want to just to catch the spring. In the context of the downtrend, we want to look for some kind of confirmation on the way up. So basically, something like this would be much more easy to trade if you are a bull at this point.
All right. Okay, any other questions or comments, guys? And again, Alessio, just a really good job. I see a lot of comments, with thank yous and a great job type of comments. So again, for those of you who are interested in more knowledge on how to use the Wyckoff methodology in your crypto trading, definitely check out Alessio's special. That's going to start next week, next Thursday at 3 p.m. Pacific. Go to our website, wyckoffanalytics.com, register, and this is probably going to be very interesting special, Alessio. I'll be definitely, attending some major parts of it for sure. And we always record, so for those of you who can't attend live sessions, you guys could definitely just buy the access and then use that, use those recordings, watch those recordings later on. All right, Philip is asking, which tool do you use to draw the big Bitcoin Pnf chart, the one that used the 10% box?
Bullseye Broker. It's a very old software, but you can find it. It's very, very good.
Yes, that particular software was somewhat popular before a lot of the softwares adopted one step back on the one point reversal. So I remember back in the late 90s, we were just struggling to find any software that would do that on the one box reversal. And now, there are so many of them. Stock Charts is doing it the correct way. TradingView is doing it the correct way. So you can definitely do that. Bulls chart is somewhat unique. They have a lot of historical data, and they are online right now. It's web-based, so you could guys just find them. Bullseye, and I'm just gonna publish it in the questions box for everyone.
Okay. By the way, Stock Charts today is doing very great job with the major crypto assets. And also TradingView for intraday traders is very, very powerful because you can go to the calculation here, Pnf calculation. So this is okay, this is another. Okay, I have to go on the other computer. But there's a very small nuance that you have to apply in order to visualize Pnf charting in the correct way and TradingView, and we will talk about this in the special for sure. So,
Dilanka is asking, will you be showing any potential trades during the course? So during those 3 weeks?
Of course, yes, especially in the third session. So basically, we want to talk about the history of the market, the way the market works in the first 2 sessions, and the third session I will show actual setups. And by the way, in the crypto report, I show a lot of setups. Sometimes they are very good, sometimes they fail. So basically, there's no problem with that.
Yeah, again, guys, if you want, this weekly updates from Alessio, whether on education, how he looks at the market analysis, or some of the setups that he looks at, sign up for his weekly report. Linda, our long-term contributing student, great to see you, Linda, here. Says, thank you, both speakers. Really enjoyed, very solid. Always appreciate the emphasis on education. And hopefully, guys, for those of you who are new to Wyckoff Analytics, you kind of sense that, yes, we definitely want our company is an educational company. We study the markets a lot, and then we bring that, knowledge to you guys. We explore the markets together with you. A lot of our students bring so many great ideas. Our communication's always open. So if you have any questions for Alessio on the cryptos, definitely feel free to email us. You can find our email on the website. And then we will just forward that to Alessio. All right. Here's the question that was asked, already, and Todd has his own answer to this. But is there an impact from the 1 billion options expiration that is set for today, Alessio?
Yes, generally we see a lot of movements and when the crypto options are expiring. By the way, you have to think of this: we are in the weekend basically, so you don't want to have trade. You don't want to trade in the weekend because I was looking at the market book today is really thin. So basically, just wait for Monday. This is my recommendation.
Interesting. All right. Martin is asking a very interesting but relevant question: how successful, Alessio, you are in your trade in the cryptocurrencies?
Well, I'm improving. So basically, I'm a student of the market. I'm not a master.
All right. And obviously, you could elaborate on this during the special. So I would say that if you want to check out, how Alessio's calls were, go to our website. All of his weekly reports are there. So, you could check out all of the calls that he has made for the last, Alessio, how long have you been publishing that report? For months and months already.
Yes, you can check the complete chronology. So basically, you can find the good trades and bad trades. So
I
that's
would do that, Martin, and just, go and kind of like check the logic there and how it how it all unfolded after that. Well, here's a question from my friend Scott. How do you think, how do you think about the fraud and manipulation that goes on to these markets? How do you risk manage this?
Yes, we will have a whole chapter on market manipulation in the course, because I think it's very important to highlight also the techniques of very small CO types in this market, because the crypto market is very reminiscent of Livermore times. So sometimes market manipulation is very evident, and you have to basically avoid very small markets with low priced assets. So we explain what asset to trade, and especially what kind of stop loss strategy you have to use, especially in intraday trading for low caps or low caps crypto. You have to be really careful because liquidity is really poor. But all the major crypto assets today are much more liquid than a few years ago.
But there are no crazy stories right now, like, oh, somebody stole your Bitcoin, from their storages, digital storages, right? Those days are gone, or am I wrong?
Yeah. Yes, those days are gone because exchanges are making a lot of money. So basically they want to preserve the ecosystem. They want to see a clean ecosystem. Basically, it's their interest.
Okay, last question, and I think that we're gonna stop here. Felipe is asking something that I'm not so sure is to how to effectively we can apply Wyckoff phases in advance in Forex markets. So what's your opinion on that, Alessio. And I don't know, do you look also at the Forex or just the cryptos?
No, just stock market cryptos. So this is not the question for me, to be
All
honest.
right. Well, let me give you my opinion because I did trade currencies for quite some time early in my career. You can definitely apply, phase analysis and Wyckoff events. It's still going to be unfolding the same way, right? We're going to have climactic action, which is going to conclude the trend. We're going to have an automatic response, which is basically a change of behavior. This is where either more aggressive buying by, institutional types or selling is going to come in phase A. And then the trading range is going to develop the same way. Now, the problem with Forex is obviously, just the volume signature. Do you have the correct volume signature? Where do you extract it? From which source? And how do you apply that? But even just with the price, you could decipher the structure itself. And you could just trade the price itself. By the way, if you want to check out some of our most recent thoughts on the Forex, go to our YouTube channel, Wyckoff Trading Method, and I think 2 episodes or 3 episodes in the Anatomy of the Trade. Franz and I were discussing the euro and the pound, and I think they did exactly what we were predicting, just to go up. I'm curious, of course, as to how we could explain this in more depth. Maybe we will have some kind of special on the Forex at some point. All right, guys. Well, with this, Alessio, this was very enlightening. Thank you so much. I hope that we're going to have a good turnout for your special. For those of you who are interested and you kind of could see how Alessio methodically and systematically approaches the analysis of the crypto markets. Every time Alessio talks, I'm kind of itching like, let's do this. Let me, start trading the cryptos. And I've been telling Alessio this probably for a couple of years now. Unfortunately, I'm too busy just to be involved in another market. But this is what Alessio does. He spends his time analyzing crypto markets. So it's a valuable source for those of you who trade cryptos. We would love to see you there. We would love to see you at other events. Check out our other offerings on wyckoffanalytics.com. Alessio, thank you. Perfect presentation, great analysis, and I'm looking forward to the special.
Thank you. It was a great pleasure for me to participate.